When I was in my 20s, I made a list of financial goals that I wanted to achieve before the age of 40. One of them was to pay off a very large mortgage. Another was to save up enough to send my two daughters to overseas universities for further education once they grew up. And the third, which I think I started a little bit late on, was to start a retirement fund before the age of 40. So what are the top financial goals that you should be aiming for before the age of 40? Chunting, looking back then, was I on the right track with my financial goals?
Well, Dawn, I think it was very commendable that you had goals as early as in your 20s. And it's great that your goals are not a number, but they relate to your life aspirations. So that brings meaning and motivation. Now, where I would frame maybe slightly differently is to have goals related to financial systems and habits, and secondly, goals about financial resilience. So you take care of not just the upside, but also the downside.
So there are behaviors that I could have adopted. What are the top ones, Chunti?
I think this is the first goal, that before you're 40, you should have in place certain financial systems, personal systems or habits, because that's the foundation of financial adequacy. So one very important one is to pay yourself first. That means you earn, save, and then spend, rather than earn, spend, and save. The second one is really to start saving for retirement and start thinking of the long term and not just thinking of the here and now. And of course, if you have any specific accumulation goals in mind, like in your case for your children's education, you should have started on that as well.
Yeah, I really think that I should have started a lot earlier thinking about retirement. But when you're young, you don't think, that the more mature years are ever going to come, right?
So maybe we could crystallize this a little bit. So let's say if you wanted to accumulate just $400,000 by age 65 and you take moderate risk, about 4% per annum. If you started saving at age 25, every month you just have to put aside about $340. Now, if you waited till you were 40 years old, you will have to put aside $780 per month to meet that same goal by age 65. So that's more than 2 times than if you had started at age 25. Now, if you leave it till you're age 50, then you have to put aside more than $1,006 per month than if you had been 25 years old when you started. So this is really about the math of it, and it's about the compounding. So it's not easy, but just get started. You can start small first, and then as the income goes up and more pay comes in, then you increase it slowly. And perhaps a third goal that I would like to recommend is that everyone should have an emergency fund of about 6 to 9 months worth of expenses. So this is in case you lose your job. And it does take maybe about 6 months or so, or even longer in some economic environments to find that replacement job or the replacement income.
So having that emergency fund is going to build up the resilience. What else builds up resilience when it comes to financial goals?
I think having your debt under control is very important. And this is debt leverage works both ways. It is like fire, right? It's a very good slave, but it is a very terrible master. So here we can use certain debt metrics to help us to see whether we are having our debt under control. So one that we recommend is the total debt servicing ratio, and we recommend keeping that under 35%. The other one is a non-mortgage debt servicing ratio, and we recommend that that be below 15%.
Are there any other really important behaviors that we need to kind of keep in mind when it comes to financial goals, Chunting?
I think the last one is actually having enough insurance coverage and to keep that coverage up to date. So it's not very sexy. People don't like to think about it. When financial planning, people like to think about making good returns and all that. But this is really, really important because there are things in life that can cause your income to stop, or you have large bills like medical bills. You can't control these things, and you need to be able to protect yourself financially against it. So the MAS has come up with a basic financial planning guide, and they recommend that for death coverage, the sums assured be 9 to 10 times of your annual income. For critical illness, be about 4 times your annual income, and that you should not be spending more than 15% of your take-home pay on it, on all your insurances.
There is a lot to remember, but what happens if you haven't made any of these goals?
I think, Dawn, that we don't have to have very specific goals. But what we do need to have are broad goals, that relate to your personal financial habits, your systems, and then to have plan to reach those that level of health. So I think financial health is, in a sense, is more important. Your habits are more important, your structures are more important, and your plan. So understand the principles and then constantly review your plan and to make sure that you're directionally on track. I think that's really the most important thing.
Chun Ting, what happens if you reach the age of 40 and you haven't made any of those behavioral changes, you haven't made any of those goals? Can you still play catch up?
Well, 40 is really not the age to give up on anything, and definitely not on financial planning. So we have this old proverb, right? I think it's from Africa. It says that the best time to plant a tree was 20 years ago, and the next best time is today. So that's really it. You know, we don't have to get discouraged, because at 40, you still have, what, 25 years, 20 plus years to retirement, and even more to our life expectancy age. So the important thing is to get started. Of course, if you didn't start earlier, you might have to make some adjustments. You might have to think about spending less, you might have to think about working longer, monetizing your property, and all these other strategies. But the main thing is to get started somewhere and to get a plan.
What I've learned today from Chun Ting is that when it comes to your financial journey, it's less about maybe setting a financial goal than developing robust systems and behaviors in your relationship with your money. You don't have to save it all and you don't have to spend it all either. There's a good balance in between. If you have a story about a financial goal that you're aiming for, do get in touch with us. You can email us at this address.